Have you ever checked your stocks and wondered why they're going up and down and what that volatility is all about? Well, today we're going to explore that big question. Why do stocks go up and down? What is supply and demand? How does it work behind the scenes? And how can we track it? How can we take advantage of it? These are great questions. These are questions that we're going to answer. So, why do stocks go up and down? Let's dive in and explore why. So the reason that stocks go up and down is supply and demand. And when we think about supply and demand, we might picture this in terms of a teeter-totter. In a teeter-totter, the more weight you put on one side, it pushes it down. The less weight goes up, right? And that's how essentially supply and demand works. You could also picture going into an auction and maybe they're auctioning off pieces of artwork and there's buyers and sellers, right? And the auctioneer says, "What do you want to give for it? I'm a 2 to 10, give me 10, not 20." He's calling out the bids, and basically the price will be dictated based off of how high demand goes, what price they're willing to pay until they find the right price. It's just supply and demand is market forces at work. The more buyers there are, the price will rise. If the sellers are the more aggressive group, the price will fall. And so that's how stocks work. If we have a lot of buyers on this side, then all of a sudden it's going to start pushing this in the other direction. Well, in the financial markets, of course, supply and demand causes stock prices to go up. So when there's a demand push, the price will rise. When supply comes in, and supply is people that own the shares that are now intrigued and willing to sell because the price has gone up, that will push the price back down. Within an uptrend, you will see that while there is more demand than supply, it will still zig and zag. And we call this in trading higher highs and higher lows. So the peaks and the valleys keep going upward. And you can think of that as climbing a mountain. There's an old saying about the stock market that it climbs a wall of worry. So there's always something to be concerned about. That's not special to this time period, okay? This is true of years and decades in the past. Did we have wars in the past? Yes. Did stocks still go up? Absolutely. Did we have natural disasters? Yes. Did stocks still go up? Absolutely. And so there's always been something to worry about. The stock market generally will climb the wall of worry. So this is the usual pattern for stocks. They are going to higher prices. Some people imagine in their mind that stocks do this. They think anything that's gone up must come down and anything that's gone down must come up. And they kind of picture fair value like this. They do the same thing with the housing market, with real estate. They think, oh, that house is too expensive. Well, if you truly understand prices are on the rise. And the market forces influence that, inflation and things that the government produces. Remember, the Federal Reserve has a goal of 2% annual inflation. What does that mean? That means they're trying to push prices higher and higher. That causes people to have to continue to work, to have to continue to produce, because things just keep getting more and more expensive over time. Stocks are a beneficiary of that. Real estate is a beneficiary of that. Anything that's an asset is a beneficiary of that production of inflation. It generally causes prices to rise. They're not always going up. Again, there's downturns, there's pullbacks, there's corrections, but the general trajectory of assets is lower left to upper right. So there's always this more demand than supply on a long-term scale. Now, on the short-term scale, you can certainly go through economic recessions. You can go through periods where the market's not in an uptrend. And if it's not in an uptrend, what happens? The stock market produces lower lows and lower highs. Lower lows and lower highs until the downtrend, until the bear market is done. The average bear market lasts about 18 months. So they're not long lasting, but a year and a half is a good sized downturn. And some of these stock market declines can cause the stock market to lose 30-40% of its value. Now, even though it goes down that amount, guess where it's going long term? It will eventually, history says, go back up, take out those highs, go to new highs. So do not get caught in that mode of thinking that prices will always come back. You will be left at the train station waiting for the train that never arrives. For example, the stock market is never going back to the 2009 lows, the global financial crisis lows. There's a pretty good chance the stock market will never go back to the COVID lows. That ship has sailed. I can feel very confident we're never going back to that low. The COVID low, I guess you could possibly, in a wild bear market, maybe go down and touch around those lows. But think about that. That's just a few years ago that happened, that COVID low, and yet we'll probably never go back to that price. That ship, those prices have sailed. It's sort of like saying, do you think real estate prices, even though they might go down for a while, will they go back to the COVID lows? Will they go back to the 2009 lows? Well, in a really bad real estate market, I suppose maybe you could get back to 2020 prices, but housing prices are never going back to the 2009 levels. So as we understand that from an investor standpoint, we are looking to buy dips. We are looking to buy at excellent opportunities to use this volatility to our advantage, knowing that longer term prices are generally going up. So if we can find a great asset, a reasonable valuation, and buy it in a little period of weakness and good price action, reversing here, what we call a pivot to the upside, maybe even a bullish engulfing candle, some of the things that we teach throughout the Cashflow Academy. We can identify these turns, we can identify where that shift is taking place and demand is picking up, and we're picking up the stock at one of those excellent discounted prices. So you can really kind of think of it in terms of, if we think that markets are going up generally, then wouldn't it be fair to say that if we were to put some dotted lines around this, we might be able to say, well, when you get up to these levels, you're trading at retail. When you get down to these levels, you're trading at wholesale. And what does that mean? What that means is basically, here is the intelligent buy. This is trading with the trend, but buying at an excellent discount. If you're chasing price that's already well extended above the prior highs, that's already in a euphoric state, that's way extended away from moving averages and so on and so forth, you are buying at retail prices. You are paying top dollar for the stocks that you're buying. And that doesn't sound like a good recipe for success. Now, if you're long term, maybe the market bails you out and you still get a positive return, but you could have done so much better if you had had the knowledge and understanding of being able to use these pivot lows and identify where that likely is taking place, where we've gone through a period of massive supply, the price has been discounted, maybe 20, 30, 40%, and we're picking it up as it's starting to bottom and pivot to the upside. And even if this isn't the low, imagine it gets a little bit worse and then goes up. Buying in this level is so much better than buying at tippy top prices. So we try to avoid buying at retail. We try to pick up our assets at wholesale, right? If we were interested in selling, we'd want to sell retail. And that's how you do it in the world of buying and selling goods and things to other people, right? If I'm Costco, then I'm producing and I'm paying at wholesale prices and I'm selling them out at retail prices, and I'm making that profit margin, that differential. We're going to try to do the same thing here. So supply and demand is the reason that stock prices are going up and down. So now that we've explored why stocks go up and down, the next question might be, well, what stock should I invest in? What's a great stock today? Check out this video to learn more about how to identify the best stock in the market right here, right now. Also, click that subscribe button if you enjoyed this video. Make sure that you hit the bell to be notified. Share the video with others. Jump in now to find out what stock is a good stock to buy today.